So we have the question here. There is an extract of trial balance and they have given three values belonging to trial balance. Sundry debtors 8,20,000, provision for doubtful debts 40,000, and then bad debts 9,000. And then we have a couple of adjustments. Further bad debts is 10,000 rupees and we have to maintain a provision for doubtful debts at 10% on sundry debtors. The requirement of this question is show how this will appear in the final accounts. So I have already drawn the format of profit and loss account and balance sheet. Now let us see how do we go about this solution. Okay. The first thing we have to see is in the question, is there two provision for doubtful debts or is there only one provision for doubtful debts? You have to see whether the trial balance, does it have provision for doubtful debts, and then is there an adjustment provision also. So in that case there will be two provision for doubtful debts. Now in this question, yes, we have two provision for doubtful debts. If you have two provision for doubtful debts, then you have to keep everything in a separate working note, do in a separate working area, in a rough working area, do the working, and then based on that result of that working note, you can go and fill the profit and loss account. So let me tell you how that working should be done. So the first thing you have to write is the trial balance bad debts. So whatever is given in the trial balance, 9,000 rupees is given. So write that number first, trial balance bad debts. Okay. Then you add the further bad debts amount. Further bad debts, how much we have? We have 10,000. The bad debts, whatever is given in the adjustment, 10,000, which is to be added along with the trial balance bad debts. Okay. Then the third thing is we have to add the new provision for doubtful debts. This new provision for doubtful debts is nothing but whatever is given in the adjustment. Okay. So this is given in the adjustment. Now the new provision says maintain, the adjustment says maintain a new provision of 10%. Normally, if the question did not have further bad debts, I would have straight away computed 10% on 8,20,000, which is the debtors amount. I would have computed that. But this question contains further bad debts. So we cannot directly multiply 10% of 8,20,000 and say that the new provision is going to be 82,000. So this will be wrong. So how to do it correctly? We have to create another sub working note for it, which is nothing but we have to find out updated debtors. On the updated debtors only we can arrive at the new provision for doubtful debts. Okay, so first thing is write down the trial balance value of debtors. Trial balance value of debtors is 8,20,000, and then you eliminate whatever was bad debts in the adjustment, whatever the bad debts amount that was in the adjustment. So you have 10,000 worth of bad debts from the adjustment. So remove that, and then you will get a value called updated debtors. So this updated debtors is how much? 8,10,000. Now on this value only you have to compute the 10% of provision for doubtful debts. Therefore the number will be 81,000. So remove that further bad debts if it is given in the question, and then find out the 10% new provision for doubtful debts. So 81,000 I have brought it here, and this is also to be added. Okay, next, the last number is old provision for doubtful debts. This old provision for doubtful debts is to be subtracted. Okay, so whatever is the trial balance amount, 40,000, that has been subtracted. Now what is the net balance? The net balance is 60,000. It doesn't matter whether we get 60,000 or 50,000. What matters is whether the number is in positive or the number is in negative. In our case the number has been positive, therefore it is expense. If you get the number a positive number, you have to call it as expense. If you get the number as a negative one, suppose the old provision was like an extremely high amount, so in that case the final number will be a negative number, so in that case this will be treated as income. Okay, but anyway, in the current question it is just 40,000, therefore the net output is a positive number, therefore treat it as expense. Now because this is an expense, all of this should go to the debit side of P&L. Therefore I transferred everything to the debit side of P&L. I just change this into 2 bad debts and write down the rest of 60,000 to this number. Okay, next, what else we have? We have balance sheet. How do we do balance sheet? Balance sheet, go to the asset side. First we have to write the debtors value 8,20,000, and then we have to subtract the bad debts first. That too, we have to subtract the further bad debts. Further bad debts turned out to be 10,000. We have to subtract that first, and then we have to subtract only the new provision for doubtful debts. Do not subtract the trial balance provision. Subtract only the adjustment provisions, which is 81,000. Therefore, the final updated debtors value will be 7,29,000. This 60,000 is the net expense in our P&L because of bad debts and because of the extra provisioning that we are creating. So this is like extra expense for the business, and after all the extra expense, the final status of good debtors that we have in our business is 7,29,000. So this is the interpretation. Extract of profit and loss account and extract of balance sheet. So this is an extract. This is also balance sheet, was also an extract. So I hope you understood the solution. Let me know in the comment section if you still have any continuing doubts. I will see you in the next video. Thank you and bye bye.